In a major shake-up within the Finance Ministry, senior IAS officer Arunish Chawla has been reassigned from his role as Revenue Secretary to lead the Department of Investment and Public Asset Management, or DIPAM. This reshuffle comes just 3 weeks before the Union Budget 2025 is set to be presented on the 1st of February. Now, in Chawla's place, Tuhin Kanta Pandey, currently the Finance Secretary as well as the head of DIPAM, will take over the new Revenue Secretary role as well. Arunish Chawla, a 1992 batch officer of the Bihar cadre, had only assumed the position of Revenue Secretary on December 25th after previously serving as the Secretary of Department of Pharmaceuticals. In his new role, Chawla will also hold additional charges as Secretary of the Department of Public Enterprises and the Ministry of Culture until permanent replacements are appointed. Tuhin Kanta Pandey, an IAS officer from the 1987 batch of the Odisha cadre, was also serving as the Secretary of Department of Public Enterprises before taking the Revenue Secretary role. Remember, all this happening within less than a month of Sanjay Malhotra, the former Revenue Secretary, joining the Reserve Bank of India as the governor. The Revenue Secretary, who had assumed office just about a month back after Sanjay Malhotra moved to the Reserve Bank of India as its governor, has now been moved to DIPAM, and the DIPAM Secretary, who happens to be the Expenditure Secretary, is now the Revenue Secretary. So, what do you make of these changes, the shuffling in the Finance Ministry just weeks before the budget? Is there something that the government is trying to do which it is unable to do? What do you make of this development, Avinash?
No, I think very difficult to comment because these changes. What is the real objective? I think one needs to be very clear and objective in their exercise. But one thing is very clear that this time, across the market, there is no buzz and there is no excitement for the budget. People are not expecting some big miraculous budget. In fact, most of the market
you your budget expectations, and you cut me short. I was just going to ask you, but you're saying there is absolutely nothing that the market is expecting.
No, I think this is the month of January, Karthik, and you see we are now headed for the budget on the 1st of February. Nothing is, being spoken in the markets. There's no excitement because I think markets expect that at least no negative surprise comes in this budget. Like last time, the capital gains tax was a big negative surprise. This time, of course, there are some hopes that middle class, people could get some tax relief. There could be some benefits for consumption. But I think, clearly you could see probably a pre-budget rally just a week before the event. As of now, the bigger event is the US president taking over on the 20th of Jan. And I think, as long as the rupee continues to be under pressure, the FI outflows continue to be so consistent, I think this is something which is troubling the market. So I think, clearly, if nothing comes negative, that itself will be considered as a big positive by the markets. But yes, hopefully, the GST issue, which a lot of people were saying that government wants to entangle a lot of smaller inputs in the GST angle. That also is something which I think markets are a little worried about because GST also collections have taken a beat. People are wondering, in this kind of scenario, the government has to give some support to the industry. Only then the industry will survive and flourish. So I think it's better to wait and watch, Karthik. But yes, markets are not expecting some great budget, fireworks just ahead of the budget.
Okay, but security transaction tax, abolishing that is something which comes up as one of the key demands every time ahead of the budget. Do you think that is something that the Finance Ministry could consider or should consider?
No, I think it's a very noble thought, Karthik, that they should consider. But, the government is unlikely to take out such a large component, when they get such a lot of revenue from this STT tax. And I think, it's here to stay. I think all traders, investors have got to now believe that once the government comes with this kind of tax, it's very unlikely that this tax would be taken out. So my sense is that, if they give a incentive for capital investment, if they give a incentive for consumption, if they give some tax relief for middle class, citizens, I think that itself will be, appreciated by the markets because I think, net realizations in the hand of, customers would actually propel consumption. And that is now the key challenge before the government. We have seen consumption levels gone down significantly. And that I think is supposed to be the primary, activity which I think the government should do.